Good morning, you're watching One News Now Markets. I'm Dani Laurel. The U.S. Federal Reserve raised interest rates to a 16-year high and signaled further rate hikes ahead. The U.S. Fed voted unanimously to increase the federal funds rate by 25 basis points to between 4.75 and 5% following its two-day meeting. Interest rates in the U.S. are now at their highest level since late 2007. U.S. Fed Chair Jerome Powell says the Fed will raise rates higher if needed. He says the Fed's focus remains on fighting inflation amid the turmoil in the banking sector.
No, absolutely not. No, if we need to raise height. Although inflation has been moderating in recent months.
However, Powell admitted that the turmoil will probably take a toll on growth and the economic outlook. Despite this, he reassured that the banking system remains safe and sound. Now, the U.S. Fed raised rates just as analysts had expected. Will our central bank follow suit today, despite the persistent inflation here domestically? To chat with us, we have Manny Ocampo, Managing Director for Equity Capital Markets at the Investment and Capital Corporation of the Philippines. Hi, Sir Manny. Welcome back.
Hi, Dani. Good morning.
All right, sir, let's take a step back and take a look at the global equity space first, no? And how this Fed movement is quelling fears of a contagion in the banking industry, or has stemmed fears of a possible recession. Could you give us some color on what the sentiment is right now?
Well, I'll talk about maybe our own situation here in the Philippines. I think, while rates, we will follow the U.S. as far as rate hikes are concerned. I guess the thing there is that we had no choice but maybe to follow suit. Mm-hmm. So that is there now. But as far as the banking issues in the U.S. or maybe even Europe, I think we've shown that we've pretty much decoupled on those particular issues.
Okay.
As far as market reaction and all that is concerned.
Sir, can you give us a bit more idea on whether this risk of sentiment has already bottomed out in terms of, we've seen some foreign funds leaving at least last week. Has that already been stemmed?
Well, the foreign funds will react to, getting away from emerging markets in situations like this. But, from what we've seen, Dani, local funds have, pretty much picked up the slack on whatever the foreign funds have been selling off the last maybe few weeks, if you like. So there's, I think what that says is that the locals are really saying, well, at some point in time, certain issues are looking very cheap, and they're cherry picking, if you like, there are really some issues that become very attractive at these levels. And these are maybe companies that we don't expect to have any issues, even in a rising interest rate scenario.
Okay. Sir, what about the financial space in particular? So I'll pull out our banking sector here. No? Yeah. Even in the rest of Asia, we saw the MSCI Asia Pacific Banking Index go down during the last week. For us, is the contagion not going to happen for our local banks?
Well, maybe let me put it in perspective. The local banks have pretty much, I'll call it, they bulletproof their balance sheets over the last so many years. You've seen banks raise massive amounts of capital through tier 1 capital raise. Maybe some have even done, stock rights offerings and all. So that's really part of the bank's. I don't know if by design, but definitely it came at the appropriate time when they did decide to beef up capital. So the banks are better prepared, if you like. Our local banks are better prepared in a situation like this.
Sir, what about the indirect effects of a possible recession over in the US spilling over into, I don't know, remittances, consumption, property, and even bank lending? Is that going to be slowing down because of these new issues that we are seeing?
Sure. Well, the impact, of course, of shall we say, exported or imported recession is always there. If the U.S. has problems, and you see job loss. Right now, at this point, we don't see job losses becoming a factor yet. That's not to say that it will not be over time, but hopefully not. But if that impacts on the employment of Filipino overseas workers, that should have an impact on their remittances to the Philippines, which would then again have a bad impact on our foreign exchange reserve. So that impacts your peso, etc. So consumption also is affected when because consumption here is pretty much still driven by remittances from relatives of Filipinos.
And sir, you mentioned the peso. What is your outlook on the peso? Now, we've finally, especially with the interest rate hikes, what the BSP was trying to do was stem the currency depreciation. But
Right.
now, with all of these issues, is there going to be a flight from emerging market currencies back to a risk-averse, stronger dollar? And how might this impact our currency?
Well, I was going to say, I think we've seen the worst as far as
Okay.
currency, shall we say, the shakeout in the currency markets were concerned. So our own BSP was quite effective on maybe addressing, shall we say, speculative pressures on the peso. And I think market players in the foreign exchange hopefully will behave. I'll put it that way. BSP though will have to match any rate hikes. If they don't, then that provides that provides an opportunity for people to again challenge the exchange rate.
Sir, how should the BSP be acting at this point? You mentioned they need to match the Fed, but at the same time, we still have persistent inflation coming out. No, to what extent can we still afford to have such rate hikes? The governor, not the governor, but Finance Secretary Diokno said we might even pause for the time being.
Pausing is, with all the developments, I was going to say, pausing may have been an option without the recent spate of bad news coming out of the U.S. But that may, we may have to delay that kind of action later on down the road, and see how we, shall we say, recover, or shall we say, move out of the current situations of U.S. banks, etc. Because that will still be a concern. Now, so given that, I think BSP has, I'll put it this way, that they may have little choice but to follow suit as far as, or to match actions of the U.S. Fed for the meantime.
Okay. Sir, which stocks or sectors should we be picking up here in these types of situations, that are maybe defensive, that are the most isolated or incubated from these offshore issues, if you can call it that?
Well, you brought up the screen earlier on the banks.
Okay.
That's
still resilient. Okay.
Yeah, it's like I said, the banks have managed to bulletproof their balance sheets, and I'd actually take a look at banks that are maybe lagging. Well, BDO, of course, is one of the picks we had for among the banks, but maybe you take a look at the other big banks, BPI, Metro Bank, that have maybe been sold down for the past couple of weeks. There may be an opportunity to pick up at good levels for these institutions. The mid-tier banks, they are also doing, and they will be very aggressive, competitive in trying to beef up net income margins. But maybe it's a smaller banks that we would have a bit of concern over if they've, shall we say, if they've built up their capital base enough.
Okay. Finally, sir, before we let you go, I just wanted to focus on one specific, a couple of specific stocks in the news this morning, and that's Bloomberry and PH
Right.
Resorts. So they actually ended the deal with PH Resorts after a review outcome. Give us an idea of what this means for the casino industry and also what your outlook is on these two particular stocks.
Well, I think there may have been other reasons for the Bloomberry Group backing out. I think you have to take a look at a more holistic view rather than just the casino place. I think the part of the deal was to take a look at Malampaya, for example. I think that was one of the other considerations
Okay.
of the Rason Group, looking at maybe taking out or bailing out the Denisul from PH Resorts on the casino property. So that's there. Now, as far as Bloomberry is concerned, then quite a few of the more established casino players. If you go to the gaming tables, they have decent occupancy. They have decent clientele right now. So that seems to be doing well. I guess that's really part of the opening up, if you like, of the economy, especially of tourism.
Okay, so there doesn't seem to be a recession when it comes to the casino tables there.
No, not at all.
Not at all. Bloomberry trading this morning at 9 pesos and 10 centavos. Thank you so much, Sir Manny Ocampo of ICCP.
Thank you, Danny.
And that's it for this hour. I'm Danny Laurel. Join us again at 11:15 a.m. We are One News, all sides, all the time.